Hello, this is Tom Still from the Wisconsin Technology Council, and thank you for joining us on today's edition of WisBusiness.com, the show. The show is produced in conjunction with the Tech Council and WisBusiness.com, and with the help of our sponsors, BDO, UWM, and Exact Sciences. Hi again, everyone. Thanks for joining us. We have three events to discuss today. March 28th, a Tuesday, state efforts to boost venture capital. We're going to have three panelists who will walk through the latest in that world. John Nice from Venture Investors, Sam Rickers from the Wisconsin Economic Development Corporation, and State Representative Robert Whitkey from Racine. April 4th, we'll be in Eau Claire to talk about workforce issues and specifically about undergraduate research and how that can help. A conference of 4,000 college students, faculty members, and others from across the country who are going to be in Eau Claire in mid-April. And so this is a preview about what you can expect, and some companies could still take part in that event if they hurry. Monday, on the March 20th, we'll be at Lambeau Field in Green Bay. Just walk-ins at this point, but our special speaker is Mark Murphy, president of the Packers, and he'll talk about the team's role in economic development in that region. Next up, Jim Hartlieb, president and CEO of First Business Bank. Hi, welcome back. I'm Tom Still from the Tech Council. With us today, Jim Hartlieb, who's president and CEO of First Business Bank, which has a strong presence in Wisconsin as well as other parts of the Midwest. So welcome, Jim.
Thanks, Tom. Thanks for having me.
Absolutely. Well, been a busy time in the banking industry. A couple of failures that have been well publicized, and a couple of market-driven bailouts of some other banks. So, should consumers be worried about broader troubles?
Well, I'm biased, but I don't think so. And the reason I don't think so is for a few different reasons. Number one, those failures, Silicon Valley and Signature, were very unique in that they were niche banks, large banks, but niche in a few different ways. One is their clientele, and then two, how they manage their balance sheet. With Silicon Valley, it's been well publicized, high involvement in the tech industry, which to my thought is that's important only to the extent that they had a high concentration of deposits. Not necessarily that it was tech, it could have been any industry, but the high concentration of deposits, it's what aided their failure. And then how they manage their balance sheet, which I'm sure all folks that have listened to this podcast know that it was very unique, very outside the bounds of any regulator, what they would allow. And then in the Signature case, it was an exposure to crypto, and then some of the same reliance on a highly concentrated deposit base. As you look at banks like First Business or others in the Midwest, you just don't see any of those same characteristics. And we could go, on and on about those comparisons. But for that reason, I just look at it very unique. The word idiosyncratic has been thrown out there a lot over the weekend. And then the second reason, ultimately the FDIC did step up above and beyond the insurance limit and bailed out all depositors. So no one's gonna, at least on the deposit side, is gonna lose money. The investors, it's a different fate. But so I just think there's reasons why consumers should feel safe with their deposit base in their accounts.
Mm-hmm. So not 1929. Probably not even 2008 in terms of that broad-based piece. And correct me if I'm wrong here, but essentially this comes down to especially Silicon Valley having a lot of hold to maturity bonds, and they got kind of caught in a crunch with liquidity based on interest rates. Is that a simplified version?
Correct. Yes, they grew their deposit base by, I think, 3 to 4 times in a very short amount of time. And so as these deposits are coming in, most banks like us, we loan that out over time, but it's a more measured pace. When you get a high influx of deposits and you have to pay your depositors an interest rate, you have to have some kind of a offset to that, right? An expense and a revenue stream. They went longer on the bond yield side to try to match that deposit rate that they were paying. And when that happens, and then short-term rates go up as fast and as far as they did, they had a negative margin. And so obviously not sustainable, which that is what prompted them to need to sell these hold to maturity bonds, which were less than market value. And they took a $2 billion plus loss and wiped out their capital base. And all of a sudden you have a bank with a negative net worth, which I would have never thought I would see in my career. So just a very poor asset liability management, and kind of incomprehensible from the regulatory oversight that we see in the banking industry.
Right. And of course, First Business Bank and other institutions like you in Wisconsin, they're regulated both kind of federally and state. And what should consumers be thinking about doing if you've got a small company and you have assets wherever, your bank somewhere else? What are some steps you should think about?
Sure. Yeah, the consumer or the business is used to, if you have a loan, you're used to the bank underwriting you. Now you have to do a little bit of the opposite. You need to do a little underwriting on the bank, which is unique. But I think it's fair to understand, given what's just happened, to ask questions about, what is your capital ratio? What are your liquidity ratios? How much in uninsured deposits do you have in your deposit base? What are your earnings? What's your earnings outlook, and what's your earnings history? Those basic things are things that we're prepared as bankers to answer, and I think it's appropriate for customers, especially with those that have large deposits, to ask those questions. But I think even more basic than that is, banking can be looked at as a commodity, and that is, every bank is the same as the same. But ask yourself, do you have a relationship with someone at your bank? When things like this happen, do you have someone at the bank that you can call? And I'll tell you, it's not common in our industry. If you only have a deposit relationship, you may not have that contact. You might have someone that opened the account, but are they equipped to answer questions, technical questions like this? And so that's the first question. Do you have that kind of a personal relationship? Is there open communication? Do you understand what are all the products and services available to help you alleviate, minimize the risk? For example, and you wrote about this in your column, Tom, there are FDIC insured sweeps and CD products that can take your insurance level from 250,000 to 50 million. Now, obviously, it's an insurance product and it's an insured product, so the yield is going to be a little less than what you might call market. But right now, for some folks, safety and soundness is the number one goal, preservation of capital, and I want to make a little bit of money. So there are those products and services available, and you should be talking to your banker about those if you have concerns.
Thank you, Jim Hartlieb from First Business Bank, for joining us in what has to be a very busy week. We appreciate your thoughts.
Yeah, no, I appreciate the time. And I wanted to make one thing clear, Tom, is you represent, Wisconsin Tech Council. This issue was not the fault of the tech community. It seemed like there's kind of a black cloud over the tech community related to this, and it was not their fault. It was a bank that had very poor asset liability management practices, and they just mismanaged their balance sheet. That's not the tech community's fault. And so I hope that's a takeaway from this podcast, and we very much appreciate it and welcome the opportunity to talk to folks in tech. We're certainly not shying away from tech in any way, and would welcome any opportunities to speak to those folks.
Okay, thanks, Jim.
Absolutely, Tom. Have a great weekend.
Thanks again, Jim. Finally, we recently published Taking the Pulse, How Quality Healthcare Builds a Better Economy. It's on our website, and you can also order hard copies if you wish.
Thanks again to our sponsors, BDO, UWM, and Exact Sciences. We'll see you next time.